Welcome back. Well, we are looking at a sort of a slightly more cautious start across some of the Asian markets. We'll see how, of course, our opening is considering the big recovery yesterday. Dipan Mehta is joining us on this leg of the show now. Dipan, good morning. Good to have you on the show and hope you're doing well. So lots of results to go over, and I'm going to actually start off with Tata Chemicals, because very rarely is it that we get a disappointment from a specialty chemicals company these days. How do you look at the stock given the big rally and the fact that we've got a miss in this quarter?
Yeah, good morning, Subhi, and thanks for having me on your show. And we're all fine over here, and hope everybody at your end and CNBC team also is in good health given the stress that we are under. Coming specifically to Tata Chemicals, I think there are a couple of one-offs which one needs to understand in the US market as well, where very large subsidiary is operating in. And also in the European market, there were some one-offs, so because of which we have seen this kind of a disappointment. But I would say that a correction in Tata Chemicals is a good opportunity. We are seeing a runaway boom in commodity prices, and that will not escape Tata Chemicals, which is predominantly a chemical company. And also, I think a lot of their expansion plans in India are going on stream. So I think if you remain patiently invested, or you look at buying into the stock at a minor correction, over the next 3 to 6 months, it could give very good returns going ahead.
Okay, got that, Dipan. I think yesterday the mind was a little focused on Kotak Mahindra Bank numbers. Of course, the Bank Nifty was falling for other reasons, probably lockdown and also the problems of banks like AU Small Finance. But Kotak Mahindra Bank also was a little less than expectation. Your thoughts?
Yeah, good morning, Lata. See, I think from time to time, you're going to get a minor disappointment here or there. And we saw that in HDFC Bank as well. But I think underlying fundamentals are pretty strong. And in my opinion, I think if you have a disappointment in one quarter and if you're underweight Kotak or you want to buy the stock, in the end of the day, it's a known story. But if you want to increase your exposure, these are the times you have to look at increasing your investment in Kotak Bank. And pretty much soon, couple of quarters down the line, you may have a fabulous number coming through from Kotak as well, partly because of base effect, partly because of improving environment. And it's a solid bank. It has demonstrated its capacity right through a lot of turmoil which has taken place within the NBFC and bank space. And frankly, I think over the last 20 years, if there are two banks which have managed to survive almost every crisis in the banking industry, it is HDFC Bank and Kotak Bank. So I think that it's not the time to sell off in Kotak because of a minor disappointment, and maybe such corrections are good opportunities. So I'm not that negative on Kotak Bank on the medium to long term.
Okay, so keeping the faith on Kotak Mahindra Bank. Stay on, we have more questions for you, Dipan, but let me also bring in Nigel, who is going to give us today's momentumizer. What's the stock you've chosen, Nigel?
Well, I'm looking at SBI Life Insurance. You know, in yesterday's trading session came out with a set of numbers, and the numbers look quite good actually. But in terms of, how's it trading? Well, yesterday there were a couple of observations. Now, in the month of March itself, the stock had seen a 10% correction from the peak that it hit in early March. But from there, in fact, it's bounced quite a bit, and yesterday it ended close to its 52-week high. Let's run you through the technical levels first. If we look at the 200 DMA, that's where it took support, and it bounced off that 860 odd mark. And now, in fact, it's crossed all the 20, the 50, the 100, as well as the 200 DMAs, as the technical levels are telling you. It moved up yesterday, and volumes were absolutely spectacular. The traded volume yesterday was more than 50 lakh shares on the NSE. Normally, in the last 10 days, we've seen around 22 lakh shares or thereabouts. Even delivery was much higher. It was 50% higher than the 10-day average. Keep an eye out on the stock. It moved yesterday with good momentum, and even in the futures market, it did see long addition to the tune of close to around 18-20% open interest built up. So that's why I'm looking at SBI Life Insurance. Back to you guys.
Okay, got that. Thanks very much, Nigel, for those details. And that's, of course, on the technicals, on the price action. But even on the fundamentals, there are quite a few upgrades that came in post the results. So, Dipan, let me ask you, SBI Life, stock is practically at its 52-week high. Can it still be bought?
Yeah, I think the underlying fundamentals are rapidly improving for private sector insurance companies, not just SBI, as well as ICICI Pru, as well as HDFC Life. And although bottom line remains pretty much flat because of the many variables which come into play, but the underlying momentum, I think 30% plus growth in new premium equivalent, that's fantastic growth. I think the markets are gradually understanding insurance stocks better and better, which is why they are trading at these valuations. And my sense is that insurance will soon become pretty much mainstream over the next 5 years, the way banking has become. And few stocks may even find themselves into the Sensex and Nifty over the next 2-3 years or so. So this is a sector where investors must have a small amount of exposure, which will gradually increase over the years. And I think any of the insurance companies, I think all three, whether it's HDFC or ICICI Pru or SBI Life, I think move up more or less in tandem. So very positive on the sector and SBI Life in particular. These are businesses are still, I believe, in investment phase. And as and when 4 or 5 years down the line, when you have more and more premium coming in from the older policies, you will see spectacular spike in net profits of these companies as well. So yes, very positive on entire insurance sector, life insurance in particular, and SBI Life as well.
Okay. Well, got that. The life companies, at least one of them is already there in the Nifty. HDFC Life has made it. I guess the others also will make their way. Now, can we pull up all the sugar stocks? Yesterday there was, some kind of a Diwali kind of buying, not in sugar, but in sugar stocks. Can we pull up some of them? Some of them are, of course, penny stocks. Bajaj Hindustan is up 20%. Ugar Sugar, again, another penny stock up 20% almost. But even the larger ones, like Dwarikesh, Dhampur, Balrampur Chini was up 16% yesterday. That's a 325 rupees stock. And likewise, Andhra Sugar is a 445 rupees stock. That one was also up about 458 rupees. Bannari Amman, rather pricey stock at 1900 rupees, also up about 10% yesterday. So it was a big day for sugar stocks. Can we have our guests? All right. Apparently, global sugar prices have been rising, and that's part of the reason why you've got this kind of a rally. But let's discuss the details. Abhinash Verma, Director General, Indian Sugar Mills Association, is with us. And in a minute, we're also going to be joined by Mr. Manikam, the Chairman Managing Director of Shakti Sugars. Mr. Abhinash Verma, first to you. Abhinash, what is this all about? Such a huge spurt in the stock prices.
Hi, Lata. Good morning. See, I'm not an expert on shares, so I'll not be able to comment the reason behind this jump yesterday. But as you mentioned very clearly that the global prices are up. And the global prices are up because of one basic reason, and that is Brazilian production this year is going to be almost about 7 to 8 million tons less than last year, as well as the fact that the second largest sugar exporter in the world, that is Thailand, for 2 years continuously, they have produced about 7 to 8 million tons less than what they usually do. So if the two largest sugar exporters in the world together produce about 15 million tons less than what they usually do, it gives an opportunity to India to export into the international market. And as India is now one of the largest sugar exporters, it has a very large surplus carry forward from the last 2 years. So one, it gives an opportunity to export, reduce our surplus sugar, as well as gain from the sugar price rally that has happened. Second, I would say that the ethanol story is shaping up very well. And it's been doing very well for the last 5 years, but the government policies look so positive that we are very confident that the ethanol story is going to help the sugar story very well.
Okay. But Abhinash, much will depend on whether the Indian government allows exports. How is the policy at this point in time? They will be worried about inflation at home as well, isn't it?
Yeah, let me answer that in two parts. Number one, sugar exports are in OGL. There is no restriction in exports. We do require government support in the form of export subsidies to export because we are not very competitive internationally because of very high sugarcane prices. As far as domestic inflation is concerned on sugar, we have very large surplus carry forward from the last year. We started this season with almost 10.7 million tons, we generally would want to carry about 5 million tons as the opening stocks. So we had more than 5.5 million tons extra. This year also, when we close the season on 30th September 2021, we expect to carry forward almost 9.5 million tons. So I don't think there is any pressure as far as sugar availability in the country is concerned. Also, the fact that the current sugar prices are much below than what we would want it to be at about 32, 33 rupees, but our cost of production on an average across the country is more than 35.
Okay, got that. We also have Mr. Manikam now joining into the discussion. Sir, good to have you on. So, Abhinash was telling us about the twin factors. One, the fact that, how the global demand supply situation is shaping up, and the other is ethanol. Let me actually come to the second factor now, ethanol. What is the offtake right now in terms of the blending program? And there were some reports suggesting that maybe even rice could be used for production of ethanol, which is going to be counterproductive for sugar manufacturers, won't it? So if you could just tell us, for instance, how much would you be participating in the blending program?
Actually, ma'am, in Tamil Nadu, we don't have the availability of alcohol for the blending program. Right now, most of it is coming from Maharashtra. But in terms of alternate rice and other grains, I think it's going to be more expensive than molasses. So I don't see that alternative grains are going to be a major competition in this. So I would think that molasses is going to be the one, and then the demand from the government is probably going up. In fact, we are requesting if the government can increase the percentage higher in the metro cities to avoid the pollution as well. So that's another possibility where they could go even higher in Delhi, Bombay, Calcutta, and Chennai to avoid the particulates in the air and stuff like that. So that could be another possibility. So the ethanol scenario seems to be fairly positive.
Okay. Well, Abhinash, Mr. Manikam, I'm just coming to you in a minute, and thank you very much for joining us. Abhinash, I just wanted to ask you, you said we are still not export competitive. Do you see that happening if sugar prices globally rise a little more? After all, what you are telling us just now is that two large sugar suppliers to the world, Brazil and Thailand, are not in a position to do that this year. So is it possible that we will manage without subsidies? See, frankly, I'm not seeing the government having too much money to do these other things when they are neck deep in health responsibilities.
Yes, Lata, you are on the point there. You're right there that if the sugar prices rally further, currently it's hovering around 17 cents or slightly 16.5 to 17.5 cents. If the prices go up to about 19 cents per pound, if there is a rally in future, then probably we'll be able to export without government support. This year, we were given a target of 6 million tons to export. Against that, about 5.5 million tons have already been contracted for. So if the sugar prices rally, we don't need subsidy, and then we can export some more quantities before 30th September. But for that, the sugar prices worldwide has to rally to about 19 cents or more.
Okay. Mr. Manikam, how are you looking at the entire composite sugar business? As you said, in Tamil Nadu, you do not have the advantage probably of ethanol as much as, say, Maharashtra or UP has. If you can just explain the economics of the sugar business, has it improved a lot more for UP mills? Will Tamil Nadu catch up?
Actually, Tamil Nadu, we have had the drought, and so, a certain amount of areas went down. And also, a lot of the plants have shut down now. In fact, we are thinking that possibly whatever factories which are running now will have, because I think over the last 2 decades, there have been too many plants which have been commissioned for the cane area which is available in the state. So now with some of the plants going out of operation, so I think the rest of the operation should be quite viable. So we think Tamil Nadu is going to be okay going forward.
Okay, got that. Abhinash, now all factors put together, there's a buffer stock that we opened the year with because of excessive production. Then there is obviously, the requirement for molasses and ethanol and exports. All put together, if you're talking about the domestic market, How are we going to be poised with respect to the production as well as the offtake? And what will that mean for domestic prices of sugar?
We need to understand that the domestic requirement would be about 26 million tons per year or so. And if we are going to continuously produce about 30 million tons every year, this year we'll be doing about 30.5 million tons. So that's going to only add to our balance unless we are able to export. And if we are going to cross this 6 million tons, obviously we are drawing down our surplus sugar balance. As I also mentioned that we'll be closing the year with 9.5 million tons. And if we are going to produce the crop in the field is very good. The acreage is good. So next year we should be producing another 30 million tons or so. Still early days to talk about the numbers. So therefore there will be another surplus production next year as compared to the domestic requirement. And therefore we need to do two things to kind of control the too high surplus. One, continue to export into the international market. Two, reduce the surplus sugar production by diverting that surplus sugar cane into ethanol. Why I said this ethanol is a beautiful program? Two reasons. Number one, it allows that flexibility to us to reduce that surplus sugar by diverting more and more sugarcane juice into ethanol. This year, we will be reducing about 2 million tons by diverting sugarcane juice into ethanol. So 2 million tons this year. Next year, we might increase that diversion to about 3 million tons. Secondly, what it does, the ethanol program, it gives immediate cash flow to us. The price for ethanol is beautiful. The government announces multiple prices for ethanol, and therefore it gives a better return to the sugar mills. I was looking at the balance sheet of one of the top sugar companies. It said that about 15% of the revenue comes from ethanol, but 50% of the profit comes from ethanol. That is the ethanol story, and therefore people who invest heavily in ethanol, people who take that advantage from the ethanol program will do very well in future.
Avinash, you're saying that inherently the northern sugar mills will have an advantage?
No, I'm not talking about any specific sugar mill. I think all of us are investing across the country into ethanol, including from Karnataka or Maharashtra or any part of the country.
Mr. Manikyam, what is your estimate of global prices? You think we are likely to reach a position where Indian sugar could be competitive in global markets even without the subsidy?
Yeah, I think it's there, Lata, as Avinash said, if it goes to 20 cents, which is likely maybe this year. But, long term, looking at a long-term perspective, I don't think we can export because the Indian cane price is almost double the world prices. Okay. So I think my opinion, considered opinion is one is with all this program, there should be some amount of temperance in announcing the cane prices. Okay. At least let them come down to the global levels rather than just competing with each other. State governments are competing and trying to announce a higher price. That should be done away with. Until they do that, they're not going to have long-term stability.
It's a fair point, sir. And for other reasons as well, isn't it? Sugarcane is the one that really taps the water table maximum. I mean, I'm not saying rice doesn't, but so does sugar. So we rather not export our water. We are becoming increasingly a water scarce country. But I guess that discussion has got to be for another day. At the moment, the political reality is states competing to announce higher sugarcane prices, not politically feasible to wish this away. Thank you very much, Mr. Manikyam and Avinash, for joining us with your thoughts. So it does look like there is going to be a sharp increase in sugar prices. At least it's not going away anytime soon. Over to you, Dipan. Do you look at the P&L of any of the companies and their share prices? Is there still headroom?
You know that generally we don't like to buy into commodity stocks, but I can't believe myself saying that sugar really is a very compelling story. And there are structural changes taking place within the industry. And I heard the entire discussion. I think they covered it very well. And this ethanol opportunity is for real. And the first thought that comes to my mind is that sugar is somewhere where city gas distribution was maybe 4 or 5 years ago or so, very nascent phase. And I think the government is extremely serious about increasing ethanol blending. And that provides a lot of stability to sugar companies. And these are high ROI businesses when the prices are fair. And every sugar company is expanding capacity left, right, and center. And I think the entire sector and most companies are entering into a very ferocious growth phase going ahead. And valuations are not all demanding at this point of time. Balance sheets quality will keep on improving as we go ahead, and of course they get subsidy from the government also in terms of loans. So I think very, very positive on sugar companies, but go with the leader. I think Balrampur Chini, Dampur Sugar, I think less risk in such market leaders than some of the smaller companies and some of the penny stocks in the sugar industry.
Okay, so go with the biggies when it comes to sugar. That's the advice. Well, there's an important set of earnings that we should watch out for today, and that is Adani Ports. Important to bring in Agam to set the expectations up. Agam for a stock that's moved from 250 to 800 in a year. I'm guessing we'll be seeing some tall expectations.
Right, absolutely. So we already know that Adani Ports has posted very strong volumes for the quarter gone by. And on the back of that, we are expecting a near 27% growth as far as revenues are concerned. Also expecting a near 170 basis points expansion in its EBITDA margins, coming in at around 61.2%, with profits expected to rise 270%. Now, a lot of this has to do with the strong volumes growth that the company has seen, in fact, 27% there as well. And besides that, the organic growth for volumes is just 10%, which means the bulk of the growth is coming from the many acquisitions that the company has made through the course of the past couple of quarters. That said, realizations are also expected to trend up high, and we also have a lot of strong operational performance, which will aid margins going forward. What are we keeping an eye on? A lot more capacities coming through from the acquisitions that they have done, as well as the volumes outlook for the upcoming year. On the whole, expecting a strong quarter for Adani Ports and SEZ.
All right, Agam, thank you very much for that. Dipan, this talk for you, again, given all the fundamental sort of factors at play, would you still buy despite the rally?
Well, Adani question is always a googly. And the entire Adani Group stocks are an enigma. The valuations at which they are quoting at, considering the debt which is there on the balance sheet of all these companies, and also considering that they are in businesses which have never created value. They are capital-intensive businesses, typically with low ROI, but market is paying a higher and higher premium. So that just doesn't, go down in my thought process. So I've been avoiding Adani stocks, and of course they've been rallying continuously. But I don't think this is the levels that one should now make a fresh investment in any Adani Group company, Adani Ports included. Sure, I think there's great momentum, scarcity of stock because of very high promoter holding, and a lot of institutional investors also believe in the Adani story and have been buying into it. But I think it's a fast-moving train, and there's not much left in terms of returns, considering the risk. At least at these levels. So I would say that at this point of time, it's best to avoid almost all Adani Group stock companies.
Those are great metaphors you use, Dipan, to describe, the dangers lurking when you get into stocks which are closely held by promoters and which are moving very fast. We have lots more questions for you. Do stay on. A quick break, and we will also have our technical experts Mitesh Thakkar and Shrikant Chauhan joining in.
केयर हेल्थ इंश्योरेंस से 25 लाख का हेल्थ इंश्योरेंस